Charting is easy. Trading is hard. The difference between an analyst and a trader is execution. In this episode, we'll walk through how to turn a mapped level into an executed trade. Let's head over to Kraken Pro and check it out. So when I'm mapping out my levels in Kraken Pro, the charting part is simple. We covered that in the previous video. The hard part comes when price actually reaches that zone. At that moment, you don't necessarily need to click buy or sell straight away. You want evidence that the level is doing its job. You want to see bullish price action at support and bearish price action at resistance. Your execution time frame is generally going to be lower than your analysis time frame. It doesn't mean that you need to use the 1-minute chart for everything, but my rule of thumb is if I'm using the weekly for my high time frame levels and zones, I'll look to something like the daily or the 12-hour to execute. If you're using the daily for your high time frame, you can use the 4-hour or the 1-hour. If you're using the 4-hour, you can use the 15-minute. You want to be on a low enough time frame that you can actually make decisions quite quickly, but not so low of a time frame that there's a ton of noise. So what I've got up here is the Solana chart, and I'm going to show you what confirmation on the low time frame actually looks like. And we're going to use a simple failed break, something that we covered in a previous playbook episode, number 2. So we have a 4-hour area of resistance, right? So this is our up candle before a move down that broke structure. This is a bearish order block or a bearish supply zone. And we're gonna now zoom in to the hourly, and we can see here, we came out, we took out this high, failed to break higher. Did it again, took out this high, failed to break higher. We could even go more granular down to the 15-minute and very clearly see that this is bearish price action forming within this bearish zone. So this purple box, I wanna be looking for signs to be bearish here. I wanna see that the bears, the sellers, are stepping in. So on this instance here, where we failed to break above the high and then broke down, you could have shorted, but you maybe want to say, I want a little bit more confirmation. We had the same setup here again, failed break higher. So price came above this high, traded above it, and then failed to break higher, had a big move back down. That is your trigger. It's closing back below that old high, and now you can actually go ahead and enter the trade. There's a variety of the different ways that you obviously could enter. You could enter on the market if there's a lot of momentum. You could put a limit order at the breaker here, and your invalidation is either going to go above this deviation here, this break above the high that failed, or you could put it all the way above the supply zone. And since it's the 4-hour chart, we obviously get a large reaction here. We're entering on the low time frame, but it's based on a high time frame area of resistance. So before entering any trade, run a quick execution or trade checklist. Am I trading at a planned area? Is there evidence of buying or selling? Has a valid low time frame setup triggered? And do I know where I'm wrong and how much I am risking? And we know that we're putting our stop here or we're putting our stop above there. This is a very simple one that we taught you in the playbook episode 2. The important part of this framework is not the specific method. You're looking for low time frame evidence within a high time frame context that your idea is likely to be correct. You can use this for order flow triggers, momentum indicator triggers, other price action entries, and so on. That's how you move from charting to trading, because charting doesn't pay the bills. Follow at Kraken Pro for more playbook episodes on entries and executions. I'll talk to you guys in the next one.